Bank of England Governor Mark Carney has drawn battle lines with the boards of UK banks. Speaking at the recent IMF conference in Washington, he defended proposals to help hold executives to account when things go wrong. The senior managers regime, which has already seen 2 top bankers announce their resignations, will make it easier to bring criminal charges in any future banking crisis, a move that Mr. Carney, who has deplored the lack of convictions after the last financial crisis, welcomes. With me to discuss the proposal is FT columnist John Gapper. John, what's in these proposals from Mark Carney? What's he trying to do that's new and different?
I think the essence of it is there's a really widespread feeling that while institutions have been given very large fines, often in billions of dollars, for conduct during and before the financial crisis, individuals have largely escaped. There have been no really big scalps, or certainly nobody's gone to jail.
And why is that? Were there no laws that could have caught them before?
What the Bank of England says, and I think is probably right, is that individuals diffused responsibility. There were committees, there were risk committees, and when the regulators come around to ask who was responsible, the matrix line suggests that nobody was really individually responsible, and they've certainly found it hard to pin a line of responsibility going right up to the top.
And so if what they're trying to do here is a common sense measure, getting bankers to accept responsibility for their actions, why are the bankers so upset about it?
I think there's 2 issues really. One is a fear of the criminal sanctions. Maybe you could go to jail for up to 7 years if your bank collapses and you're found to have been absolutely reckless in the way that you were running it. Secondly, and I think that this is something that concerns a lot of the individuals involved, particularly non-executive directors, is the reversal of the burden of proof in civil sanctions, not the criminal ones. But you could be found, you have to prove in the case of a bank collapse that you had done the right things, that you put in the right controls. And I think a lot of people involved or potential directors are concerned about that.
And when the banks say that this might make it more difficult for them to find non-executive directors, do you think they're right?
I think certainly there's a question about that, because if you're the non-executive director of a bank, you're not earning the big bucks that a chief executive or a senior executive director will be earning. You're not earning millions. You may be getting a fairly comfortable amount for being the non-executive director of a bank, but then you weigh that up against the risk that you could end up in jail, and I think some people will say, well, it's simply not worth it.
Could you say this is the sort of banking equivalent of corporate manslaughter?
It is, I think, but except that corporate manslaughter is a very difficult concept because the idea of the corporation having responsibility. I think the Bank of England is actually in the lead internationally in trying to sort of narrow it down from just saying responsibility is too diffuse to saying actually individuals are involved, individuals do make decisions, and they allow these things to happen, and they should take responsibility for it.
So is this a tougher regime than what you'd find elsewhere in the world?
I think other regulators have talked about individual responsibility, and there's a growing sense now that it's a bit strange that in effect shareholders are suffering because they're having billions taken away from them, but the actual executives involved are not. But the Bank of England's proposals are some of the most advanced and clear in this area, so in that sense it's taking the lead.
But would they have caught rogue traders?
Well, one of the issues here that we've found in a lot of the rogue trading cases and actually some of the financial crisis cases is it wasn't that bank boards were saying, we know we're taking enormous risks, but it's fine. They actually had no idea what was going on. The issue is how you incentivize people and make sure that they can't just casually say, I don't really know what's going on, that they're highly incentivized to dig down into the business and find out.
So new standards of responsibility for bankers in the UK. We'll have to see whether that's something the bankers want to engage with or something they decide they'd prefer not to. But John, thank you very much for discussing it with me.